Assalamu alaikum and welcome to the fourth lecture for P1 June 2018 online classes. I am Kashif Kamran, your tutor. Now in the yesterday class, we were discussing about the topic 4, different types of corporate governance regimes. And in that discussion, we came across the two sets of corporate governance. First being the principle-based, which is followed in UK, Combined Code of Corporate Governance, and second being the Sarbanes-Oxley Act 2002 being followed in USA. Then we came across the major difference between principles or rules. Principles were comply or explain approach, whereas the rule was a comply approach. The basic difference between rules and principles were the flexibility in a principle-based approach, comply or explain, whereas that flexibility is not there in a rule-based approach. Rules are more fixed, they're more rigid, and that's more like box ticking. Now, towards the end of the class yesterday, we made a list of the characteristics for principle-based corporate governance. So let's put a recap of that and then move towards the rule-based exercise. Now, yesterday we were discussing that principle-based approach, which is followed in UK and rest of the world, except for USA, are guidelines, best practices, is comply or explain. You might like the best practice, so you should comply with it. If you don't like the best practice or the business think they have a better practice, then they have to explain the better practice and follow your own practice. It is flexible. It is judgmental because you can exercise your judgment when you're following the best practices. It is cross-jurisdictional. That means principles can be applied the world over. Now, just the vice versa, rule-based approach. When you look at a rule-based approach, now this approach is only followed in USA. In terms of the rule-based approach, the rule-based approach is box ticking. So the rule-based approach is box ticking. So that means everything written must be followed. Is mandatory, is comply approach, is mandatory, is must to be followed by all listed companies in USA, is must to be followed by all listed companies in USA, is a comply approach. No flexibility. There is no flexibility. You have the business have to stick what's mentioned in the law. So it's yesterday the principle-based approach was cross-jurisdictional. That means it can be applied the world over, right? So the rule-based approach is not cross-jurisdictional. It's a local law of a country, and being a local law of a country, it can only apply within that country. So there is a difference between a principle-based approach, which is the P1 syllabus, which is the UK-based governance, and the rule-based approach is just the vice versa. It's been followed in America. It's box ticking. It's mandatory. It's a comply approach. There is no flexibility for the companies. They have to stick what's mentioned in the law, and it's a local law of the country. It can only comply within that country. Now, one of a very frequent question in the past papers is to distinguish between principles and rule-based approach. So this checklist in front of you will help you to distinguish between principles and rule-based approach of corporate governance. Then another question which comes on principles and rule-based approach, because your syllabus is focused on UK. So in an exam question, you will get a criticism of a rule-based approach, which is the USA approach. So your syllabus will never ask you to criticize the principles. Your syllabus will ask you to criticize the rules because that's not the focus of your syllabus, and that's the American approach. Your syllabus focus on the UK approach. So in an exam question, if you come to write, criticize the rule-based approach, or you get a question in P1 like argue against the rule-based approach. So as a student, you should know what are arguments against a rule-based approach, why a rule-based approach is not good. So in a P1, a student should have a mindset of criticizing or going against a rule-based approach. Why a rule-based approach is not good? Let's make a checklist, something we learned yesterday. A rule-based approach is not good, firstly, because it has no flexibility. That means it's box ticking. Whether the business like it or dislike it, they have to follow it. So that means it is more of a necessary, it is more of a necessary evil. More of a necessary evil means it's more of a formality. You have to do it. Whether you like it, you dislike it, you have to follow it. So it has no flexibility, right? It's the first argument against a rule-based approach. Secondly, it's one of the major criticism when the rule-based approach was adopted in America is that it's one size fits all. So that means a, a small, a medium, or a large listed company in America need to follow the same rules. So that's irrespective of size of business. So obviously, whether you are a small listed company, a medium, or a large listed company, because obviously the listed companies vary in sizes. Irrespective of your size, you have to follow the same Sarbanes-Oxley. So it could be a burden for a small company. It could be an unnecessary burden for a small company. Had it been principles, a small company could have decided principles in their favor. A small company could have taken a decision what is good for them. But in the case of America, a small company cannot take a decision. They have to stick to what has been stated. So it's very costly. Rules are costly because there is a high compliance cost of rules. High compliance cost for rules because you need to stick to rules. So you need to follow the high compliance cost. If the rule says you need to have an internal audit department, then you need to have an internal audit department. You need to incur the cost of an internal audit department. Had it been principles and the principles said you need to have an internal audit department, then you could have a comply or explain approach. Then you could have a comply or explain approach. That means a company must have decided that whether internal audit department is good for them or not. But in the case of America, if it is written that you should have an internal audit department, then you should have it, whether you like it or not. So you have a very high cost of it. Rules are cost, high compliance cost for rules. So there is criticism, right, for rule-based approach. No flexibility, one size fits all, and costly, right? So please remember, this is one of a very frequent question in P1 exams, asking students to criticize a rule-based approach. Okay, if that is clear, I'm moving ahead into further discussion. Now we know Sarbanes-Oxley, the rule-based approach, is a very minor part of the P1 syllabus. So we'll first discuss rules, which is in our syllabus, and then the whole syllabus thereafter is all the principle-based approach. Okay, let's go back and start discussing the further aspects. Now, topic 5 is about the Sarbanes-Oxley Act. That is just one small topic in P1, which will introduce you to some aspects of the box ticking. Now you don't have the whole Sarbanes-Oxley in P1 exams. You just have some selected provisions of Sarbanes-Oxley which a student should know. So let's see what box ticking we have in P1 exam for Sarbanes-Oxley. So this is one alone topic 5, building upon rules. When we look at the specific provisions of the rule-based corporate governance, that is Sarbanes-Oxley, the first provision says the establishment of a public company accounting oversight board. So the Public Company Accounting Oversight Board is the regulator, right? Public Company Accounting Oversight Board is the regulator which regulates Sarbanes-Oxley, which ensures that the company is complying. One of an important feature of rule is that for a rule there should be a regulator, because the regulator enforces the rule. The regulator enforces the rule, and if the rule is not being followed, the regulator would penalize. So regulator would enforce the Sarbanes-Oxley, right? And the regulator would penalize the company if it has not been followed. So the role of the regulator becomes very important when we look at Sarbanes-Oxley. So the establishment of the Pcaob. So when the Sarbanes-Oxley was introduced in America in 2002, the very first thing they did was they established what they established. They established a regulator. Which regulator? Pcaob, which is the regulator for enforcing Sarbanes-Oxley in America, and which is the regulator for penalizing a company if the company fails to non-comply with Sarbanes-Oxley. Number 2, auditor should review the internal control systems. Now we know auditor, basically when auditor performs an audit, auditor do review the internal control systems. Auditor do performs test of controls. That is a part and parcel of an audit process. But when Sarbanes-Oxley says auditor should review the internal control system, it is giving an emphasis that the auditor should review. Should means must, mandatory. Auditors should review the internal control systems. Now we know when we perform audit, the test of controls are taken on a rotational basis. Review the internal control system. Now, normally the TOCs, the test of controls, are taken on rotational basis. You can do them 1 year, might skip them the next year. But when Sarbanes-Oxley says you should review them, that means the test of controls have to be performed each year. Each year. So that means whenever you come for an audit, you have to review the test of controls each year. Should review. So that is a very strong emphasis. So Sarbanes-Oxley is emphasizing that the auditor should review the internal control system. Right? Number 3, there should be a rotation of the lead partner after every 5 years. Now we know this rule from F8 paper that the partner has to be changed after 5 years. In some jurisdictions, it's 7 years. But Sarbanes-Oxley is saying that the partner has to be changed after every 5 years. Every 5 year means familiarity threat. I hope you remember that from the F8 paper. The partner has to be changed after every 5 years, not 7 years. Under Sarbanes-Oxley, every 5 years. So the partner should change after every 5 years. Number 4th, auditor are expressly prohibited from carrying out non-audit services. Auditors are expressly prohibited from carrying out non-audit services. That means in America, if you are auditing a company, then you cannot provide a non-audit service to that company. Auditors are expressly prohibited from what? From carrying out non-audit services. So if you are auditing a company, you cannot carry out non-audit services for that company. So that means you need to maintain independence. right? Fifth, audit working paper should be retained for 7 years. The working paper should be retained for 7 years. We know that in case of the F8 knowledge, the working paper should be retained for 5 years. But in Sarbanes-Oxley, the auditor conducting audit of an American company will retain the working papers for 7 years. That means the evidence you have gathered, you will retain that for 7 years. After 7 years, you can discard it. But within 7 years, you cannot discard the evidence. So if there is any litigation on the audit firm, then the evidence can be utilized. So for 7 years, you need to retain the evidence. See, the provisions we have in P1 for Sarbanes-Oxley are mostly on auditor because that's the focal point of P1 exams. And we know that in the case of Enron scandal, Arthur Anderson, the audit firm, was equally part of it. So most of the provisions which is in P1 is focusing on the auditor. Auditors should review the internal control systems. There should be a rotation of the lead partner after every 5 years. Auditors are expressly prohibited from carrying out non-audit services. Audit working paper should be retained for 7 years. Then the next one. Annual report should contain a director report on internal controls. The annual report should contain a director report on internal controls. Now we know that the annual reports do contain a director report, but that is a director report on the performance of the company. The Sarbanes-Oxley is saying that the director needs to report not on the performance, that is something which was happening since last many years, but the director has to report on the internal controls even. The director needs to inform the shareholders that the internal controls are strong or not. So see, the directors have a responsibility now that they have to tell the shareholder that whether the controls are effective or not. So the director should report on internal controls. We'll study more about director report on internal control in the internal control section. So the point number 6 will get more emphasized as we go into the internal control section of the syllabus. But as per the responsibility, the director has the responsibility, right? The director has to put a report on internal controls telling the shareholder whether the controls are good or bad in a company. Then number 7th, companies should have a whistleblowing procedure. Companies should have a whistleblowing procedure. Whistleblowing procedure means that the company should have a procedure for employees to whistleblow. If there is something happening wrong in a company, then the employee should have a procedure to report it to someone. If there is a fraud happening in a company and an employee gets to know about it, then the employee should whistleblow that to someone. So whistleblowing procedure. So employee should have a courage to whistleblow, and he will only whistleblow when he thinks there is a protection. If there is something happening wrong in a company, no one will whistleblow unless and until he have a security. No one will whistleblow unless and until he knows that if I whistleblow, I will be protected. So whistleblowing procedure means there should be a protection of the person who is whistleblowing, because obviously anyone who is whistleblowing needs protection, and he also needs confidentiality. Obviously, internal auditors, Asad, would be covered under whistleblowing. If internal auditor gets to know something, the internal auditor would also whistleblow that. If the internal auditor gets to know about the fraud happening in a company, he will also whistleblow. But remember that internal auditor, if gets to know that the directors are involved in fraud, the internal auditor will feel intimidated. The internal auditor will feel threatening that what if I tell the director that you are involved in fraud and the director remove me from the company? Because obviously at the end of the day, the internal auditor is like an employee of a company. Intimidation threat, exactly. So anyone who gets to know that the directors are involved in fraud, they need to whistleblow, but they will only whistleblow when they feel confident about it. if they are protected and the confidentiality is maintained, then only then they will whistleblow. Is that clear, Asad? Okay, so there has to be a whistleblowing procedure, right? So the whistleblowing procedure is the protection. So anyone can whistleblow provided he thinks there is a protection, provided he thinks there is a confidentiality. No one will disclose my name. And we know that these whistleblowing procedures should be anonymous. If I whistleblow, my name will be kept anonymous. No one will get to know that I whistleblow. So whistleblowing procedure should be anonymous. There has to be a protection and there has to be confidentiality. Next, the chief executive officer and the chief finance officer should certify the appropriateness of the financial statement. Should certify the appropriateness of the financial statement. See how much of the responsibility they have. The CEO, the CFO should certify the appropriateness of the financial statement. We know management prepares the financial statement, right? Management prepares the financial statement. So the management needs. Okay, so the management prepares a financial statement, right? So when the management is preparing the financial statement, they should ensure they are free from errors. They should ensure they're free from frauds because the auditor would audit them later and the auditor audits them on the sample basis. So you cannot expect the auditor to identify everything, but the management knows it because the management is preparing it. If there is any error, the CEO and the CFO would be held liable. If there is a fraud, the CEO and the CFO would be held liable. So they should certify the appropriateness. So see how much of a pressure they have now. They have to certify that the financial statements are free from material misstatements. And if the certification is wrong, then the PCAOB would penalize them. So there is a pressure, right? Certify and see the regulator. The regulator is there. So if there is a wrong certification, the PCAOB can make you liable for that. Is that clear with specific provisions of Sarbanes-Oxley? Okay, so that is ending the scope of Sarbanes-Oxley in P1 exam. So as a student, you just need to know these 8 for P1 exam, and that is the maximum Sarbanes-Oxley you have in your syllabus. But you should know the difference between rules and principles. Examiner has never asked for specific provisions in any of the P1 attempts, but the examiner do ask a student to differentiate between rules and principles and to argue against rules. But one of an important thing which has come in the past paper is number 6. That is the director report on internal controls. We'll do this once we come to internal controls. So we'll emphasize what are contents of director report. The examiner has asked that in the past paper, right? A student should know what is the content of the director report on internal controls. So we'll do that in the topic of internal control. That is the only important thing. Apart from that, 1, 2, 3, 4, 5, 7, and 8 has never been examined. So remember the focal point, right, of this topic we're just ending. Topic 5, now comes the big syllabus. The chapter 2 of the BBB book has ended. We're starting with the chapter 3 of the textbook. And this is the last chapter which will wind up the corporate governance. And we know corporate governance has a 35% weightage in the P1 exams, right? So topic 5 is the start of the main course, which is the UK Combined Code of Corporate Governance. So the maximum knowledge you will get about the UK governance and the maximum knowledge you will get about P1 corporate governance is from the topic 5 onwards. So let's start with a very important block of syllabus. Now, in terms of this, the very first thing we need to discuss in the UK corporate governance is the role of the board. Now, before I start with the role of the board, I need to make something very clear. So let's do a clarification of an organization structure, because then understanding these topics would become easier. Okay, now when I talk about role of the board, now let's make something very clear. If I look at the pyramid of the organization has 3 levels, right? The strategic level, the technical level, and the middle and the operational level, right? What are we concerned about? We're concerned about this, which is basically the strategic level, right? I hope you remember corporate governance is a system by which company is directed and controlled. That is strategic level, right? How company is directed? The company is directed from the top. And how it is controlled? It is also controlled from the top. Strategic level is very important when it comes to corporate governance, right? Now try to understand. At the strategic level, if I make my hierarchy for corporate governance, this is the hierarchy for corporate governance, right? On the top, there is a person known as CM, chairman, right? Under the chairman is the board of directors, BODs, right? Board of directors. And these board of directors are executive directors, not the non-executive directors, right? And with the board of directors, plus with the board of directors are the committees of the non-executive directors at the same level, right? CM, and under the CM is the board of directors, and with them is the committees of non-executive directors. And I hope you know the 4 committees which are part of P1 syllabus. 4 committees, right? Risk, nomination, remuneration, audit. They're all part of our syllabus, so we'll be studying them. Risk, nomination, remuneration, and audit. Right? And under the board of director, that is the strategic level, right? Then if you look at this operational, this technical level, at the head of the technical level, right here, right, is a person known as a CEO, Chief Executive Officer. Chief Executive Officer is known as the head of the company, not head of the board, head of the company. He runs the company. Chairman, right? Chairman does not run the company, right? Chairman runs the board. The CEO runs the company. Chief Executive Officer, he runs the company. So where is the CEO? The CEO is the head of the middle management, head of the company, head of the middle management. Not sorry, just clarifying my statement. head of the this the CEO is head of the middle management, right? Just 1 minute. This PowerPoint is restarting. Okay, let's go back where we were. Okay, so I just lost that. I'm just reproducing that quickly. Now, we know there are 3 levels in an organization. The strategic apex of a company, 3. This is known as the strategic part of the company, right? And this is known as the technical part of the company. Now, at the strategic part is the CM. Under the CM is the board of directors, and with the board of directors is the committees. So the chairman runs the board, and he is the head of the company. He runs the board. Then at the technical level, there is a person known as CEO. CEO is the head of the middle management, not head of the company, head of the middle management. Head of middle management. So he heads the middle management. So that means from here to here, head of the middle management. And what is the function of the CEO? The CEO runs the company and the chairman runs the board. Now, this is very important for P1 to know who is the chairman. Will study that, who is the board of director, who is a committee, and who is a CEO. These 4 people should be very clear to a P1 student. He should know the CM and the CEO, and you should know the difference between a CM and a CEO. P1 examiner expects that you should know the role of the CM, you should know the role of the CEO. We'll study all that. But you should also know the difference between the CM and CEO. We'll study that as well. Then you should know the board of directors. You should know the committees, the 4 committees: risk, remuneration, nomination, and audit. So how many individuals we should be knowing for P1? 4. CM, board, committees, 3, CEO, 4. But I hope you're clear with their position. Where are they positioned in the company? So at the strategic level are the 3. At the technical level is 1. Is that clear in terms of their hierarchy? Okay, so please remember this hierarchy, right? This will be helping you in the later part of the syllabus, but these are 4 very important individuals we should be knowing in the corporate governance. Okay, now moving further from that, we are starting first with the role of the board. Role of the board is the first topic. And in terms of the role of the board, UK corporate governance, right, says all listed companies. We know corporate governance in America or in UK only applies to listed companies. All listed companies should have an effective board. Effective board means effective board of directors, collectively responsible for the success of the company. Collective, they're working as a team, right? Board of directors is a team, collectively responsible for success of the company, increasing the wealth of the shareholder. We were discussing that yesterday in the agency topic, that what is the agent responsible for? The agent is responsible to increase the wealth of the shareholder, collectively responsible for the success of the company. Now, what exactly effective board means? Effective in terms of, if someone asks you what can make a board effective, so you will tell him that the board could be effective in terms of leadership. Is that true? That a team should have a good leader. So board is a team, right? So the board should have a good leader. And who is the leader of the board? The CM, the chairman. The chairman is the leader of the board. So the leadership has to be effective, because if the leader is strong, the leader is effective, automatically the board will become effective, right? So the chairman will study later what is the role of the chairman. Then only you will realize that how important the chairman is in terms of making the board effective. There should be division of responsibilities, segregation of duties, division of responsibility. There should be segregation. Segregation of what? Segregation of roles. The chairman should know what is my role. The CEO should know what is my role. There should not be overlapping roles. The chairman should not do something with this, which the CEO is doing. The CEO should not do something which the chairman is doing. The board of directors, every board of director, whether it is a finance director, marketing director, HR director, each director has a role. So segregation of role, right? Segregation of role of the CM, segregation of the role of the CEO, segregation of the role of the board. So everyone should know what is their responsibility. I hope you remember the topic yesterday, agency, agent responsibility. So every agent should know what is my responsibility. So effective board in terms of leadership, right? Effective board in terms of division of responsibility. Number 3, board should be effective in terms of skill, experience, knowledge. That's true. We did that even yesterday, agency topic. Disciplined people, disciplined people. The director should be knowledgeable. The director should be experienced. The director should have good knowledge. I hope you remember that term we used yesterday, disciplined people, agency. Then the board should be effective in terms of non-executive directors, committees. The non-executive director keeps a check on the board, right? Committees keep a check on the board, and obviously the check will keep them effective. The check, I hope you remember yesterday, accountability, and the accountability coming from the non-executive directors. So when the director knows the committee is checking me, and when the director knows the committee is keeping a check on me, automatically they will become effective. So committees, non-executive directors, they hold board accountable. Size of the board. The board will be effective in terms of the size of the board versus size of the company. Bigger the company, bigger the board. So bigger the company, bigger the board. So a small company might have 4 directors. A large company might have 10 directors. Size of the board versus size of the company. Diversification of the board. The board should be diversified. Now diversity means so many things. Board should be diversified in terms of age. Board should be diversified in terms of religion, multinational company. Board should be diversified in terms of skills. Board should be diversified in terms of gender. The more diversified the board is, the better. If you are a multinational company like Unilever, like Nestle, like Kellogg's, all these multinational companies do need to have people from different religious background so that they can take decisions in the best interest. They should have people from different age brackets. They should have people from different skill brackets, gender bracket. So more diversity means more creativity. More diversity means more innovation. I hope you can realize the importance of diversity. Diversity brings innovation. Diversity brings creativity. Now, diversity is a topic in P1, so I'll be doing that separately. If I look at my list, leadership will come again. Division of responsibility will come again. Role of non-executive directors will come again. Diversification will come again. So 4 topics will come again later. Leadership, division of responsibility, role of non-executive directors, and diversification. These 4 topics will come again, right? In terms of more depth. But are you clear in terms of being effective means what? Effective in terms of leadership, effective in terms of division of responsibilities, effective in terms of skills, effective in terms of NEDs, effective in terms of size of the board, effective in terms of diversification. Is that clear? Board should be effective. Okay, great. Okay, I'm just taking a 5 minutes break. Absorb this. I need to make a exercise on role of the board, and we are just resuming in 5 minutes with the exercise on role of the board and a proper understanding of the leadership, division of responsibility, role of the NEDs, and diversification of the board, right? Just a 5 minute break, and we're resuming back. Okay, welcome back from the break. We were discussing the role of the board, and let's continue with that exercise. The next thing we need to discuss in terms of the session exercise, give 5 examples of board diversity. We just came across that, right? That the board should be diversified, and the board should be diversified in many things. Uh, Diversity is something very important, right? Not for a local company, but for an international company, diversity is very important because they have to take decisions not for the national environment, they have to take decisions for the international environment. So diversity becomes extremely important for an international company, or normally a company we refer as a multinational company. Answer: the board should be diversified in terms of gender. The board should be diversified in terms of age. They should be diversified in terms of experience, qualifications, nationality. So they can have directors from different nationalities, American directors, British directors, directors from Asia. So they have a global viewpoint. Qualifications, they can have directors from MBA backgrounds, chartered accountancy backgrounds, so that brings diversity. Experience, some have 10 years of experience, some have 20 years of experience, some have 25 years of experience. Diversity of experience. Age, some are in 40s, some are in 60s. Diversity of age, the younger lot, the older lot together in the boardroom. Gender, obviously the male, female. So they can all bring good things. Let's see if we can pick in religion, right? Even religion. If you're a multinational company, then you need to have diversity of religion even. Can you think about diversity bringing advantages? What can be some advantages of diversity of the board? Let's do an exercise on that. Okay, let's go back to the Word file. Let's plot another P1 question. I hope, Asad, you are there. Okay, fine. We are discussing a topic, diversity of the board. Examiner has written an article on diversity of the board. Let's see what sort of a question comes on diversity, and are we prepared for that? Okay, let's start an exercise. Diversifying the board members. In P1, the student should know the benefits of diversity of board, right? So let's see what are diversity benefits. If the board is diversified in terms of age, religion, experience, gender, skills, qualifications, etc. If the board is diversified in terms of age, religion, experience, gender, skills, qualification, etc., it will bring if the board is diversified in terms of age, religion, experience, gender, skills, and qualification, it will add diversity to board environment or to board room, which will benefit in the following manner. Yes, broader view of decision making. Perfect. There can be many benefits, right? Perfect answer. Now, in terms of the following minutes, number one, better decision making, incorporating views, incorporating diversified views. So the decision making would become better because we're incorporating diversified views. Secondly, diversity would bring in more creativity or innovation to the thought process. And more importantly, diversity would bring in better brainstorming, better exchange of ideas. More importantly, diversity can bring in better results for shareholders because the decisions would be better. The better decisions would lead to better results for shareholders. It would help the board understand different markets, different cultural issues, different social demographics. Because if it is a multinational company like Unilever, which sells products in so many countries, they should know the demographics of Pakistan. They should know demographics of Middle East. They should know demographics of Australia. They should know demographics of Singapore. Demographics. So if they're making a product, how will the product go into the Middle East market? How will the product go into the Pakistan market? How will the product goes into the Far Eastern market? So help the board understand the different markets, different cultural issues, different social demographics, which enable the product to sell well. So diversity can bring fortune for business, right? It can bring better decision making, bring more creativity, bring in better brainstorming, better results for shareholder, help the board understand different markets, and again help board understand needs of different customers, different stakeholders across the world, across the regions, across the region. It is only for a multinational company, right? Across the region, across the world. Right, so as a P1 student, you should be equipped with writing benefits. Now, this is just a journal list of benefits, right? Further, the case can help you. There might be something in the case. Further, the case can, but it's not sure, it can, it cannot. The case can help you with identifying more points. In the past attempts, there had been cases which has been very productive. You read the case and you can find a benefit from the case study with identifying more benefits. But the list above is a journal list helpful for P1 because P1 do test your knowledge. So in terms of knowledge, you should know what are benefits to diversity. Is that clear in terms of diversifying the board members? Having a clear picture of the topic? Okay, let's go down with the next thing then. Now, we started with the role of the board, right? The first role of the board was the board should be effective. Let's see the other roles of the board. The role of the board, we are continuing with the topic. Board is responsible for setting the strategic aims. Now, these are pretty simple roles to remember for exam paper. Board is responsible for setting the strategic aims. Aims means the goals. Obviously, that's the most important duty of the board. The goal, where we want to be. I hope you remember the initial classes, where we want to be, goal. Board is responsible for setting the strategic aims. Board is responsible to ensure sufficient resources are available to achieve aim. Sufficient resources are available to achieve aim. What resources? Human resources, right? To achieve the goals. Financial resources. Obviously, you cannot achieve your goals without financial resources. You should have good amount of cash. You should have good amount of liquidity. You should have good amount of finance. You should have the human capital. Employees, the employees must be motivated, pumped up, because if the employees are demotivated, the goals will not be achieved. Physical resources. Physical resources like inventory, physical resources like manufacturing plant. If your manufacturing plant is out of date, you cannot achieve your goal. If your warehouse is not proper, you cannot store inventory. So physical resources like warehousing, manufacturing, physical resources like inventory plays a very crucial part, right, in achieving the aim. Next, board should meet regularly with a formal schedule of matter reserved for it. With a formal schedule of matter reserved for it. Meet regularly. We know there is a term known as board meetings. Board should meet regularly. Regularly. There is no definition of regularly, right? It depends upon the need. They can meet once a month. They can even meet twice a month. Regular. Regular depends upon the need of the business, right? So the business has to decide how regularly they have to meet with a formal schedule of matter. Formal schedule of matter is the agenda. We know every meeting has an agenda, right? So formal schedule is the agenda of the meeting reserved for it. Every board member has an agenda. The agenda tells them what is the subject of the meeting. And when they get to the meeting, they discuss the agenda. Agenda reserved for it. The annual report should include a disclosure of how the board operates, including details of members and their attendance. So in the annual report, we should give a disclosure of what? How the board operates. How the board operates in terms of what? Disclosure of how the board operates. How the board operates in terms of what? How the board operates in terms of being something we just did, effective. How the board operates in terms of being effective. How the board operates in terms of leadership. Remember the points of effective. How the board operates in terms of leadership, in terms of size of the board, in terms of skills, in terms of diversity, in terms of NEDs. I hope you remember that list of effective we just did as the first role of the board. So that is the answer, right? How the board operates in terms of being effective. Is that clear? How the board operates in terms of being effective? Okay. Details of members. Details of member means in the annual report we have to give the details of members about directors, the name of director. Details of member means the director name. You must have seen the annual report giving the picture of the director, age of the director, experience of the director, the nationality of the director. All of these things are disclosed, right, in the annual report. I'll just show you a glimpse of the annual report after completing my point, but details of the member, right, and their attendance. In the annual report, we even do give the attendance of the director, that how many meetings have the director attended. If there were 10 meetings in a year, have he attended all the 10 meetings? That means he's a very good director. He attended all the 10 meetings. But if they're a director who has just attended 5 of the 10 meetings, then mean he has been very much absent from the meetings. So detail of the members and their attendance. This helps the shareholder, right? The shareholder can get to know from the attendance that how willing or how motivated the director was. So if the attendance level was 100%, that means he's a good director. If the attendance level is less than 100%, the shareholder can criticize you. So the annual report should include a disclosure of how the board operates, including details of members and their attendance. Is this clear with the role of the board? That's completing the topic, right? I need to show you a proper corporate governance report now so that you can get the application of this. Okay, let's see the report. If we just have a look at some of the reports, three years. Okay, can you see this report of the Clover? And it's exactly, yeah, that is a different story. None of them is an ACCA, but that is just a Clover report, not a very famous company though. But just to understand the topic, it is telling us about the age and their qualifications. So that means the disclosure like such is given, right? See, they're even telling us about the board composition, that how much of them is non-executive and executive. See, they're telling us about the age, their years of experience. So it's quite a graphical report, right? It's also portraying the gender diversity, pictures, qualifications. So that is a proper picture, right, of things. Okay, you were more concerned about who is an ACCA or who is not an ACCA. I think that's more of our self-interest, right? But such disclosures are given, right, in the company's annual reports and so on and so forth. Okay, now I'm just keeping my lecture down to this. I think the pace was good today. Induction of directors should be the next topic. Slide number 72 should start from the next course. The two attendees today were absent for reasons that they cannot be available for the class timings today. So I'm not projecting the lecture more. But one thing is important. I emailed you, all three of you, about the past papers. I have attached all the past papers from 2013 to 2017. Please do check. Please do check your emails. Asad, yes, I'll reconsider the class timings. Currently, For me, it's very difficult, but I try my best. I try my best to come out with some solutions of the Saturday class timings. Uh, Currently, I'm just keeping it short down to the reason that Sabika and Faizan, both of them are not in the class today for the same reason. But obviously, the recording will be made available, even if, irrespective, no one is attending the class. I can even attend a host class and can share the lecture with you. But I have emailed all three of you with the past papers from 2013 to 2017. And in the email, I have mentioned the past papers, which we will be starting in the next class. The next class is a practice class, right? So no lecture, but it's practice. So please do read the email, and please ensure the questions I have marked in the email to read, to properly go through them, so that we can have a good practice session, so that you get the first feel of P1 exams. You will get to know the marking schemes, you will get to know how to write an answer, and you will get to know how to build up an exam temperament. Please ensure whatever has been done till slide 71 is been revised. All the articles recommended to you since the start of the course to the slide 71 have been read. So by next weekend, please ensure all the 71 slides are done. The articles recommended have been done, and the papers recommended in the email are done too, so that we can have an effective class, effective practice session next week. Is that clear, Asad? And obviously, I'll reconsider the class timings. I'll try my best for that. Right? So I'm just shortening the class today by like half an hour or so, considering the pace was good, just being one student. And I hope if the classes goes as effectively as they're going so far, things are on track for course to be completing by the first week of May. Obviously, I'm just building upon my lectures currently, and once the past paper practice starts in, things would be good enough. Okay, then, Allah Hafiz, revise your lectures and prepare effectively for your P1 exams. Allah Hafiz.